Hello, welcome to the weekly update, February 14th. Happy Valentine's Day. As I bring you this weekly update, how are my favorite folks doing? My traders who follow me. You're going to have to bear with me. You're going to hear some construction noise in the background. The war room is under construction right now, so we'll try to keep it to a minimum, but the workers are doing their work, so just bear with me. The information will be good. Let's first, guys, get into talking about uh, catalysts that affected the stock market this week. Um, First of all, U.S. inflation cools to 2.4%. The Consumer Price Index report released on Friday showed inflation slowed to 2.4% in January, lower than expected at 2.5%. This cooling trend following a volatile year on tariffs boosted hopes for potential Federal Reserve interest rate cuts later this spring, providing a tailwind for real estate and utilities uh, sectors. Resolution on the U.S. government shutdown. It officially ended Tuesday, which helped lift prices, and then finally released a delayed CPI and jobs report. Um, the reopening, the reopening reduced immediate political risk premiums in the market and helped the Dow Jones climb back towards record highs. Um, Thirdly, we had AI disruption fears hit tech. Yeah, we talked about this last week. While tech has led the market for years, this week's saw a sell-off on Tuesday through Thursday as investors worrying about AI disruption in industries beyond the software itself, such as trucking, logistics, and insurance. The Nasdaq fell roughly 1.8% on the week as a result. Of course, we're going to cover all that in the charts. Also, Bitcoin, we've added to our technical charts by request. If you guys have stocks or tickers you'd like me to cover, if I get enough people asking down there in the comments section, I will definitely consider adding it. But we've added Bitcoin. It's flash crash in the recovery. It was a wild week for crypto guys. Bitcoin plummeted as low as 61,000 early Friday, half of its all-time high before rebounding back to 70,000. This volatility was fueled by liquidations and a shift in institutional whale behavior following recent policy changes. As a matter of fact, um, I saw one report that a large whale wallet sold Bitcoin had been holding for 15 years. So some of the whales did sell off, moving the markets. Gold and silver debasement trade rebound. Precious metals saw a bumpy ride this week. We'll talk about metals. Gold rebounded to approximately 49.80 per ounce. After a sharp plunge in January, investors are currently split between safe haven appeal of gold and the debasement trade, which is hedging against a weaker dollar and high deficits. Slump on energy, on warmer weather. Natural gas tumbled 5% this week. This is primarily due to new weather forecasts predicting above average temperatures across most of the United States, which lowered heating demand and offset supply shocks from last month's Arctic blast. So what a change. Went from an Arctic blast to now a above average warm weather coming. Strong Treasury actions. The U.S. Treasury Department auctioned 125 billion in 3, 10, and 30-year bonds. The 3 and 30-year auctions were some of the strongest in years, guys, indicating high global demand for U.S. debt and helping stabilize long-term yields. Easing tensions with Iran. I know it goes back and forth when we talk about it, but oil prices, specifically WTI, slid about 1% to settle near $63. A major catalyst was seeing easing of geopolitical risk premiums as the White House continued nuclear negotiations with Iran, reducing the fears of major disruption with the Middle East. But they are parking more military assets offshore in case negotiations break down. So could spike at any minute. The ECB and Eurozone deflation. The ECB, guys, which is the European Central Bank, held interest rates steady at 2%. This followed news that the Eurozone inflation had slipped to 1.7%, which is actually below the bank's target. This divergence from the U.S. inflation trends put downward pressure on the euro against the dollar. So for those trading the pairs, that gives you directionality of the trend. And then finally, the value rotation. A significant internal market shift occurred this week. Large cap value stocks significantly outperformed growth stocks, while growth heavy tech indices struggled. A value benchmark finished the week 2.2% higher as investors moved money into boring but stable sectors like materials and industries. And now, guys, that's how the cycle works. So they're moving money from risk off into stable benchmarks, right? We will see that money rotation. And then as there's an acceleration, we'll see that money back risk on as the cycle continues. Now, let's get into the technicals. That's kind of the back information. Thank you for being here for the report. If you like this, share it with somebody you think can use this information. Comment below, like, subscribe, and follow for more, guys. Let's get into the charts. All right, first, let's look at the Nasdaq. The white line, if you're new, the report represents everything forward to the white line represents this past week. So this is last Friday. This is this Friday. One significant thing I saw in the NASDAQ, guys, is remember we spoke that it was kind of range bound up against, ignore this color, right? This should be gray. It's just the range I'm identifying. And we've fallen out of that range. We did not break this low, though. Right. So this number 23,840 will be significant support because of the dip back in November held. And then certainly this critical anchor VWAP on a breakout run. I think that goes back as far as Trump's election down to 23,400. So there should be support in here as we continue to try to find support to run back up. But very significant resistance in the Dow in and around 26,000. If we have a good week this week coming up, we'll probably return back into this channel. All right. So nothing major going on there. We did break out of the channel a bit and searching for support. So perhaps we'll get some discounts on stocks that are held in the NASDAQ. The S&P 500, guys, kind of the same story. We are a bit range bound. I know this is a broken record from my last couple weeks reports, but we can only report on what the markets are doing. We've struggled to break this 7,000 mark where I called initial heavy resistance months ago at that price. It's a very psychological price, but we are range bound and we haven't swept out these lows to change the trend. We had an uptrend that is now flattening into a consolidation or range bound zone for either a breakdown or a breakup. The longer this goes on, volume will win on its way out. If we get any positive catalyst, it will take that volume to break this level. So downside support at 67.30, give or take by 10 to 15 points, and significant support below that at 6,500. But right now, a positive week would do the same thing to the SPX and SPY as it did will do to NASDAQ, and that will bring us back in range bound. But keep in mind, the more times we touch this level, the more times the auction is satisfied and sellers are cleared out and then allows buyers to push through that level. That is true of all support and resistance. The Russell 2000 is range bound. I have this drawn. I personally trade this a lot in the futures market, RTY and M2K. We briefly several weeks ago breached 2,700. We fell back down to 2,566 and then tried a second attempt setting a higher low where this 2,700 zone is still pretty strong resistance, but proving right now 2,600 is its support zone. Below that is clearly 2,550 to 2,500. So I would expect nothing more than a positive week still running us in this channel. I don't know that we will break this channel by time we do the next video, right? So just simply reporting on that. The current buys are in around 2,600, sells around 2,700 as we cool off from this uptrend in the January effect, right? So this is either consolidated rest for a further upward move, or this is consolidated exhaustion for a sell-off. And we won't know until the range breaks with volume that indicates which side the auction has won. Right? Adding to this is Bitcoin. I did just a kind of a quick analysis. I cleaned up my chart on this. Let me adjust it for you guys. So there's two key levels that we have here. Now, our crypto expert believes that a lot of buys exist in around 59,000 to 6,000 is kind of like the hold line on this. And you can see we tapped into that and shot back up nearly 11% off that bounce. What is that? Actually, I'm guessing, but let's measure it. Get out our measuring tool, 20%. All right. So math was bad there. Did you see that? But we do have overhead resistance in this consolidation range that you see here in around, 85 to 90,000. But I want to point out Bitcoin will not return bullish on the cycle, in my opinion, until we break that red line. that red line in that kind of that red box zone, you have the key psychological price of 100,000, and this anchored VWAP is set at 102. So that's going to form a zone of resistance that will smack price down because there's a lot of sellers over top of that. And that, guys, is your anchored VWAP to the all-time high, which hit on Monday, October 6th, 2025, when we hit 125,000. We will not return to challenge that until we get a 2-day close above that price, which is a 2-day close filter confirmation that that all-time high anchored VWAP in 100,000 has broken. So, matter of fact, if I were playing Bitcoin, as price returns to that level, I would look for a short entry off of that VWAP with a tight stop loss to your risk tolerance, and then trail it back down, right? Wouldn't necessarily have a take profit target. It could be to the low, but as it goes into my side, I'm just going to trail it down, let me pay. The converse would happen, guys. The opposite would happen if we get a close above, let's say price comes up, it hits it, rejects, then we close once, close a second time, right? And then continues up. Your long plan at that all-time anchored VWAP would be to buy at or near it with a tight stop loss in case it breaks, say 99,000. Again, to your risk tolerance, this is not financial advice. This is just what I'm seeing in the charts. You must do your own due diligence. And then a potential price target of attacking that all-time high. And remember, the guys, that all-time high will also provide resistance where sellers exist. So let's make a line there on the chart, and that is a zone. It won't be the exact line because the way psychological pricing people front run and position in and around it. That's what creates a fuzzy standard deviation around that. So there is the long plan, and then the short plan would be just the opposite on its first attempt, right? There you go. That's how that level is tradable. Just the same, guys. This buy down here, if we get a retouch of that level, run a tight stop loss to your risk tolerance, and then try to run it back up to the all-time high. So we buy support and we sell resistance. We sell resistance and we buy support. It really is that simple, guys. The expertise is in finding or having an education to find the correct support and resistance. We've done the indices, we've done Bitcoin. Let's get into a few stocks that we're monitoring, guys. I think Google, I've said this for a while. I think Google is going to be the clear winner in 2026. It is in the buy zone. Let's tighten this just a little bit. In around that psychological price of 300 currently right now. It is right now not showing support. Although what I want to point out, we do have declining price and we do have some slowing volume, which means it's searching for support, right? We do have a consolidated zone where price kind of will set resistance, maybe for a wick or deeper penetration. This price at 98 is the bottom of my box and surrounds the psychological price of 300 by about $10, right? Again, fuzzy math, because people will pre-position. If you just try to buy 300 and a hedge fund comes in and buys 301, you'll never trigger. That's why that was, and if we pierce into that, I'm going to be on it. I'm going to be monitoring it, but it is getting interesting now that Alphabet is dropping down into discount levels that we like, where you can begin to size in. Again, on thesis, I think they're going to be a winner this year. Do your own due diligence and see if your decision lines up with mine. I want to talk about Oklo, guys. I did a reel on this at Student Alpha 1 on Instagram in conjunction with Driving Markets on this potential buy setup. So Oklo is in the nuclear space. We are very bullish on nuclear during the Trump administration. And it is just it climbed. And guys, this climb was on speculation, right? We see this often, speculative buying and then selling as profit takes, and then stop losses trigger that where people bought, but then would put their stop losses in the money, and then those start triggering, and then you get a sell off. Very common for stocks like this, speculative buying. And then what has to happen for it to return is down here. The E means earnings report. Now they have to start showing that they're producing profit. So first was speculative buying on potential. And then what comes is a longer term ramp up on positive earnings reports and turning a profit. So, but what I see here, guys, is a very critical line. This white line is the all-time or the IPO anchored VWAP, which is creating a zone. I've set an alert on that. For those that don't know, you can right click on an anchored VWAP and you can add an alert. That way, if I'm not watching the chart, my charts will alert me that that is hit. And I actually have it set up to trigger my phone also in these trades. So I don't have to stare at charts all day. Is it there? Is it there? I can also set an alert. As you can watch me do it live, I'm going to right click on that all-time high anchored VWAP and set the alert. And it will actually send the alert to my phone. But here creates a very solid trade plan. You could buy at or near this IPO anchor VWAP, which is currently priced at 57.75. Again, it's a fuzzy zone, give or take a few dollars, because people will position around that. Hedge funds watch these. That's what you got to remember. Big money watches these lines. All right. Matter of fact, I think that some big hedge funds secretly watch my weekend update. What do you guys think? Let me know in the comments. But you can look for a buy with risk tolerance to your liking, and then run that back up to where there's going to be strong resistance, just like I spoke on the other instruments, because it always holds true. If the all-time high anchored VWAP is above us, it is resistance. All right, and we'll sell. Like, you don't believe me? Look, here's the all-time high. It ran into it, sold off. Ran into it again, sold off strongly. What do you think is going to happen on the next attempt? Probably going to sell again. Eventually it will flip, but probably not until it compresses. So this is a solid trade plan here. And then you look to take profit there, and which is nearly 100%. If you buy in here, 80 to 100%. So you could either buy and exit 100%, take the profit, or another great trade plan, guys, is once you're 100% in the money, sell 50% of your shares, which removes your entire cost basis. So you have no money in the trade, and then you just allow it to run. So this area represents profit for you, where you're actually just owning the profit that you made and you have zero cost basis. You can roll that into another trade. It's a very savage and smart way to invest. If you have questions, thumb down there in the comments, guys. If you're in the group, you can always tag and ask me the question. MP Metals, just because we've kept it on the report, is failed multiple times. This overhead all-time high anchored VWAP and the breakout anchored VWAP, which is currently strong resistance. You can see I have an alert set when it taps it again. Downside support, I have that alert set and hasn't changed at $50. That's for my area of interest. I want to see if that holds. So right now there is no trade decision on that, as we are between those two key levels on an absolute sell-off, and a place that you could put if you like this thesis and you like MP Metals, where you could put a skunk order, is down here on that IPO anchor VWAP in around $39 or $40. So you might catch a quick wick. BBAI, Quantum really got beat up bad this week, as you heard in the initial part of my report. We still have analysts having it between $6 and $8, which was my short-term target on this. And I got stopped out by 3 cents this past week on trade discipline. So my DCA was initially this green line, and then I bought, like I reported in a report, I'd buy one more allocation, hoping that this gold line would hold, which it rebounded off that and then sold through. So I am out of the trade currently. And what I'm looking for right now is I'm looking for support in this current zone. But really, if it sells off, I'm going to eyeball this kind of $2.35 to $2.50 for another potential entry, but it's going to have to show me support there. And of course, if you follow my weekend updates, I'll be on top of it for you. We'll keep an eye on it. Love the thesis. It's just a matter of it showing strength in the charts. Pony, same thing. Analysts have between $15 and $29. Let me zoom in here so you guys can see it. It's really a story of this white and red line, which is the all-time high and the IPO anchored VWAP. So this red box is extremely strong resistance. Let me expand these out. We did find support in the green in this green zone that I talked about. Absolute support down here at $10, but really it needs to break that kind of 1492. We'll call it $15 zone to continue up. Any buying down here would be partial ordering just on a discount, but really I believe the true buy signal would be re-breaking and holding that on a 2-day close filter. So somewhere just above $15 to try to challenge all-time highs. And guys, the same thing that I said about the AI or the other stocks and instruments is that you get a lot of speculative buying in things, and that's why you see the spike. And then it sells off. You see this on IPOs all the time, right? Something that IPO'd, a lot of speculative buying, but then it has to show for investors, it has to show long-term profitability for it to return. And then you're going to start seeing that in earnings reports. So this thing will probably run sideways. Our next earnings report is March 31st. So we're about 6 weeks out, and it might just oscillate in here, might even slow down. If it has a good earnings report, it could spike back up, right? So if you're an owner of this, that's what you got to wait for. This was a long-term play if you bought it on speculation. Same thing with QBTS. Analysts have this as high as $48 with an average of 32. And guys, we're almost half that price right now. So many analysts like me see this at a 50% discount right now. And I want to show you overhead, we have the all-time high anchored VWAP. This green line is its May's breakout anchored VWAP, and we have gap support right down here. So let me extend these lines out and let me zoom in so you don't have to use your microscope to see my chart. This zone is going to be important for support, and then down below us down here, 13. So again, I own this in two accounts, and I got stopped out at that red line in one of my accounts. So I took 300% profit from my buy way down right here. So I made 300%. I did leave a lot of money on the table, right? Which is fine because I talked about this and talked about this and talked about it. Why didn't I cash out here? Because this is what I want to hold for years and years and years, right? So I'm just trying to stay in the trade and looking to size back in. I still own this stock, but really, again, tell me, how do we challenge all-time highs in anything? We must close and hold above the red line, the all-time high, which is currently at $28. And then this zone that I've created is that psychological zone around that. So deep discounts end around 14, just sizing in fundamentally now, but really we need for this thing to return back to those high pricing at $48 and such, we have to close above this zone. And again, it's a long-term hold. If there's 52 weeks in a year, we might talk about it 52 times before it spikes out after, 3 or 4 earnings reports. IonQ, same story. There is a trade set up here. There's your IPO anchored VWAP, just like we said. I'd drawn this in previously, but if you buy in or around this IPO anchored VWAP at $30, give or take a small percentage with risk tolerance to your liking, and then you can run it back up to this line, actually, is the all-time anchored VWAP. So let me change the colors of these. Significant VWAPs are green. That way you know on my charts that the all-time high is red. So I like buying the IPO anchored VWAP and selling the all-time high anchored VWAP when I swing trade, and that's what I'm sharing with you. But guys, do your own due diligence and make your decisions for yourself. So Oklo in around $30, selling just over 50. QUBT, quantum computing, um, doesn't look healthy right now, guys. We failed. See how it failed the all-time or the IPO anchored VWAP? Couldn't close and hold, couldn't close and hold, and then dropped. I think the next support zone is going to be around 576 and maybe as low as 453. Right now, it just needs to find support because right now this white line is resistance and this red line is the IPO, or I'm sorry, the all-time high anchored VWAP, which is higher pricing, and then this is the most recent high. So that's very strong resistance overhead. That'll be tough to break. Right? So you can buy a deep discount fundamentally and try to run it back up, or you can wait for confirmation. This one isn't as healthy as the others. All right. This, I'm just saying, technically, I don't know the fundamental side of this. Quantum computing, and guys, we all know that AI and quantum is the wave of the future. So it's best to not put all your money into one of them. It's best to spread it out so that you can eventually be in the dynamic winner in this sector, right? And then finally, four U's, energy fuels, nuclear thesis, cup and handle. Here's your bowl. Here's the lips of the bowl. This is the handle. This red line is the all-time high anchored VWAP, and we expect that to happen. So my trade plan that I have in place from last week, and a number of people triggered in, was buying that all-time high anchored VWAP, the first one. Here's the matching one, and then running it upward. Okay. Price target is to trail. So if you're leery on this trade, one way you can trade is you buy partial here, and then you see I set an alert at kind of the, if you imagine a bowl and then it having the lip, kind of the brim, as it were, you would add on confirmation that that breaks. You could buy here and then add on your trade here. So if you bought in around 20, then bought at 28, your DCA would be 24, and you'll be happy if this formation plays out. But look, we have very mitigated risk here. This is a small amount of risk for pretty good reward. And if this breaks out, you take a small loss. It might find support at the bottom of that bull, right? And then it breaks the formation, but that could be support for just a continuation. But the important part here, guys, is the fact that you've got mitigated risk. You're not just going to buy this with a hope and prayer and then just watch it do this and say, Alpha, I bought it at $20, it's at $2. Should I take my loss? No, you should have taken your loss right there by a very small percentage. That's how and trading investing works, guys. Okay. You're betting on good fundamentals and solid technicals that you're going to be on the right side of the trade a high percentage of the time. All right. So that covers indices, individual stocks, as well as Bitcoin. Let's get into metals because many of you guys are interested in metals to wrap up my report. First of all, gold. All right. Let's take this down to the hourly on this. I like the hourly because we get more candles. Okay. We saw, as I talked before, on that severe drop a couple Fridays ago, it did reclaim the all-time high anchored VWAP, which meant that was strong for gold, unlike silver that didn't break it. And then the sell-off again held. You can see we had a lot of buyers in here. And then we sat in this zone for about 2 weeks, the 5,000 and 5,100 zone. We did have a sell-off Friday on another short attack in silver that if you read about it, that was kind of shut down again by the Shanghai Futures Exchange. Although the CME group is trying hard to screw the markets by overnight again increasing margin requirements, forcing people long wanting delivery in silver to close their positions. And if they didn't close it because they didn't have the capital to cover the margin requirement, they closed it for them. They are trying to short metals. So they're trying to short silver because they can't deliver. They cannot deliver. Listen, they cannot deliver. The short attacks are not over. So this was a sympathetic move with silver, and gold shows some strength. So this trade plan is what I've talked about. I think that a nice discount in gold right now is around 48.55. We nearly got tapped into it earlier this week at 48.77, but I'd keep an eye on that area with this. If you're trying to swing trade it with a stop loss, I have it like just around 47.99 to 98, and then buy it right back up to 5,100. You got to do your own risk analysis here. Maybe you need tighter risk than that, but that would be a solid trade plan. One thing we saw happen Friday is after this, it was kind of amazing to watch. It sold off hard, and buyers pushed it back up against that all-time high anchor VWAP back into the range, which buyers right now are refusing to allow gold to fall. So we're going to see it probably this week be range bound again here. So as it were, 5,000 is kind of the buy support. 5,100 is kind of the sell zone, but closing on the daily, right? This would be the daily close, even though these are the hourly candles above the all-time high anchored VWAP. Even though we fell outside of it, it regained it. It's showing strength. So that's why I like this zone in case we get another kind of quick move down and then run back up. So keep an eye on that area, 48.50 zone with your own risk tolerance, guys. So on silver, I get so many people, where do you want to buy silver? I don't like trading silver right now. It's being manipulated too much. But again, I want to point out two areas. The all-time high anchored VWAP. I said it would not break. It's recorded. You can go look. When it was back here, what did it do? It tapped it to the number, guys. Look, perfectly, and then sold off hard. It's not going to break again. As long as these short attacks are in, that's where institutions are selling it down hard again, by flooding the market with paper, and then they're going to short the position to write it back down. So this hasn't changed from last week's report. 71.25 zone. You want to watch that for If you absolutely want to buy it, risk tolerance to your liking, it could be as wide as that, but $6 is rough, there, and then run it back up to the all-time high anchored VWAP. And the inverse. I think selling, again, guys, I can't emphasize enough. You must run tight stop loss when you do this with the volatility. I personally will not be trading it like this. I'm going to wait for February 27th is expiration for at least this month's expirations manipulation to be over, and then I'll relook at it. But those are the two key levels, guys. If this level breaks, it's going to be sinister. We're going to head back down. That means your short attack is strong. So if this level breaks, you're going to expect to see 64 or lower, right? If it holds, it bounces back up to the all-time high anchored VWAP. That's why you mitigate risk in case you're wrong. Do not buy naked, meaning I'm just buying and I'm praying to the silver gods, please, please pay me. Guys, if I had a dime for every idiot that messaged me like that, I don't even answer those messages anymore. You have no business trading if you do shit like that. You don't have a risk plan. You don't have a stop loss in place. You have no business trading. And furthermore, if you don't even know what a risk plan is, you have no business putting money in the stock market. None, right? You've been warned. Platinum, it's in the buy zone right there. Bounced into the buy zone that I talked about. Let's move this marker. I think this should be right there. Am I right? Let me move it a little bit more. There we go. Um, I like this buy zone on a swing trade between 1900 and 2000. So, and right now proven that 1960, I know you're like, well, it's a 100 point zone. Yeah. So you just size in, stop loss below it. I like that. There's your all-time high anchored VWAP. So there's a couple 300 points that you can profit from, or you can sell most of your cost basis and write it back up on a swing because when metals release and go, platinum's going to benefit from that. If you're conservative, you wait for the bottom side around 1900 to see if it holds. I love swing trading platinum. That's what I'm watching. Palladium, same thing. I've talked about this. I've exhaustively talked about 1600 to 1680 as the buy zone. And look what happens every time it's in that zone, right? Then you have, this is not the all-time high anchored VWAP. This is the recent anchored VWAPs, recent highs. The all-time high is way up there, 3400. So imagine if you could buy and hold this, foster that trade with a trail stop outside of the daily beta and run that to that 33,000 and some mark. That would be huge, right? But we're going to hit these resistance box overhead before that happens. So there you go. Buy zone here, TP1, TP2. Buy support, sell resistance. Copper. Copper is looking a little boring right now, guys. Strong on the thesis. I said before uh, in my previous thing, I said 605 is resistance. I missed it by 0.008 of a penny. So 0.8 of a penny. So sorry. I'll work on my accuracy for you guys. Um, but what that means is if you like the thesis, there's the all-time high anchored VWAP. That is resistance. Again, it needs to flip 588 to re-challenge that 605 and higher. Downside support is proven to be this green box between 550 and 565. And then I like this kind of absolute buy down here at 545. Multiple ways to size in. We will hit resistance at 588. So if you buy down here, it won't break that 588, 585 zone the first time. So you have to stay. So let's say that you buy it at 550. It runs up and it pulls back 10 cents. You got to stay below that to endure the opportunity to break that. That's called beta or volatility off of levels, and that's how you have to trail it to stay in the trade. Otherwise, your stop loss triggers. You realize you're trailing profit, and then it could break the VWAP later, which is fine. If you take your profit, you wait for the signal for it to break the VWAP, 2-day close filter, and then buy that. So, and then you're back into the instrument. Guys, that wraps up my weekly report. Again, if there's anything that I didn't put in here, if you have questions, put them in the comments. If you're in the group, reach out there. Uh, I'll see a lot of you guys in meetings this week, and you can always find this weekly update on YouTube. And hopefully, we have a good week trading this week, guys. Best of luck to you. Thanks for following. Share this with somebody that you know that might benefit from the information. Have a good rest of your weekend.